Welcome to Champion Investor. It's the end of week 3 of 52 weeks, so it's a long way to go yet. But this week, I've got 2 things for you. First of all, a website update and this week's best performers. So firstly, website update. I've had quite a few people asking for mini leaderboards. This is creating your own little mini leaderboard for your school, your college, university, or if you've got a group of friends, you can do it as well. This is how you do it. So you've got to register and log in, of course. Then click on this little bit here, username, and the profile image, okay? You go into that, the profile, and scroll down, and you see at the bottom of the page, mini leaderboards. And it says here how to do it. By the way, it's quite self-explanatory, but you click the blog there, and you'll see exactly a bit more detail how to do it. And I've done it here, for example, and you'll see then your leaderboard. And I created a little leaderboard for me, my wife, my sons, a couple of friends. Oh, who's number 1? Happens to be me. So any help, let me know, but that's how you create your own mini leaderboards. Okay, this week's best performers. Let's go to the website again, click the leaderboard here. Takes you to the main part of the leaderboard. And of course, this is broken down into 3 sections. All-time leaders, okay? The best performers the last 28 days and best performers the last 7 days, last week. And the best performer is Rinky. He is at Rinky. He's 134,000. So excellent progress on the initial 100,000 given they were invested. And let's have a look at Rinky's strategy. Rinky is employing a high risk reward strategy. Okay, invested £100,000, all of it in Predator Oil and Gas. PRD is a ticker there. This is a high risk reward strategy for many reasons. Investing is about risk versus reward. Okay, so let's look at the risks and the potential reward. Risk number 1, it's a pre-revenue loss-making company. What does this mean? Essentially, this is a profitable company. Okay, they have revenue by selling stuff, what they sell, could be a product, could be a service, and then you take the costs of that, how much it costs to actually employ people to create that product, that service, you take that off, and what's left is your profits. Let's say you got 10 million of revenue, okay, or top line, that's often called. Take the 8 million of costs off, that's how much it costs to do that, and then you get 2 million left at the end. Now, a loss-making company or pre-revenue has no revenue, so their costs, basically what their losses are, okay? So this is the income statement for Predator Oil and Gas, and companies release income statements every half year. So you half year, first 6 months, and then the end of the year. So this is 6 months, okay? Now you can see here, this is the income statement. Normally, revenue would be here for revenue generating companies, but they don't have revenue. So they're making a loss of 2.3 million. So when investing in a loss-making company, ask yourself 2 questions. How much money do they have? How long will it last? Now, to look at this, it's worth looking at the balance sheet, okay, or the cash flow statement. But let's look at the balance sheet. There's 2 parts of this. Essentially, assets, what they own, liabilities, what they owe, all right? And you can see here in the blue, assets, and down here is liabilities. That's total assets, that's total liabilities. Now, you can see in the assets, under current assets, is cash and cash equivalents. And they have £1 million there. And last year, they had 3.3 this time. So it's come down a bit. You can see they're losing money there. So Predator Oil and Gas had 1 million cash as at the 30th of June 2022. And they used 2.3 million. Like I said, that's the loss they made in operations for the last 6 months. So if they do that again for the next 6 months, you're thinking, surely they have no cash left. Because they're burning 2.3 million, then £1 million in cash. Where do they get the cash from? Normally, shareholders. So they issue shares in a placing and they raise some money. And in fact, look, on the 1st of August, they announced they raised gross proceeds of £10 million. Okay, now it's not easy to raise money, especially in the current market. The current market is what's called a bear market. It's very hard. To raise money, potential investors have to be confident they will make money on their investment. So they've obviously done that. So they've raised 10 million cash. That doesn't seem an issue. So that risk is removed. What's the next risk? Risk 2. Gas exploration and pre-production. It can be quite risky. It's not can be. It is risky exploring for oil and gas. A lot of time, these companies aren't successful in doing it. They do have several different operations, and one is almost pre-production. There's an oil field. There's 3 areas in Trinidad. They're in Morocco and they're in Ireland. But in Trinidad, it looks like they're near production. But exploration is a bit more risky. But nevertheless, it's always a little bit risky. So let's look at the reward then. So they released this news on the 12th of January, saying they're doing these well workovers in Trinidad, and they're going to generate gross net operating profit at 3.1 million. So revenue's going to start to come in, hopefully, they say, between H2, that's the second half of 2024, and the first half of 2025. And there's further development going on here, hopefully. And if this proves successful, then they could give $202 million, which is multiples of their current market capitalization. So you can see that there's reward there, can be quite substantial if they achieve their goals. But it's not a foregone conclusion, because like I said, there's often lots of setbacks or or problems when looking, exploring, or producing oil or gas. So it's quite a high risk strategy. But if they do it, there could be lots of reward. Okay. Now this is what I call pretty much a high potential stock. Why? By that I mean its share price is not based on current profits, but on future potential profits. Okay, so at the moment, it's a bit of a story. So this news they released on the 12th of January did this to the share price. I'll show you here. So this is a chart. The green bars are daily share price movements. Each bar is a day. If it's green, it goes up. If it's red, it comes down. Okay. Now this is on the 12th. Like they announced that well, it was the 12th down here, and it jumped up by like 18% on that day, and it's gone like 30% in the last few days. So Rinky has done very well over the last week or so. Look at the chart there. In fact, we're going to charts later, but you can see there's maybe a bit of what they call resistance there, where the price may stumble a bit and come back, but who knows? But well done, Rinky. Now, if they do produce this gas and it's commercially viable, there's profit coming, and that's why the share price has jumped. Okay, so when investing in companies, try to weigh up the risk versus the reward. Okay, what are the risks? How big are they? And is it worth it for the potential reward? And hopefully that will help you investing going forward. That's it. Good luck this week. Who knows? This time next week, you could be on the leaderboard. You may even be the champion investor.